Good morning, guys. The countdown was fun, but my 2 minutes might be a little bit too long. So let's get into it. So again, like I said, it's a new technical setup. Again, I think it works correctly, or maybe not. I don't know. It should. So the countdown should have stopped, and I still see it. Yes. No, it works. It works actually. Interesting. So the new setup seems to be working. At least you'll see something, you'll hear something this time. So I won't wait too much and go into it as long as it works. I have my profile, my other laptop here that I can check that it works. So let's get into it. The key thing is that I still need to practice what I'm doing here with this stuff. Anyways, so let's get into it. Obviously, I mean, we will focus a little bit on Jay Powell, his intervention. There's a lot to say. I probably, it's probably already been covered by many of you anyways. So I'll try to stay brief and try to give you some perspective that I've not seen overall in what I can check, basically where I get the sources from the news. So if my English doesn't make any sense to you, it's not you, it's normal, it's me. So let's go. This guy, I mean, this is another assassination attempt on Donald Trump. This situation is as weird as the first assassination attempt, considering the profile of this guy. I mean, we've seen a lot of crazy stuff about this guy. This is a guy that was totally broke, had a divorce, couldn't even pay for child support. He has been removed from having to provide for child support, and then next thing you know, is living in Hawaii in a mansion worth a little less than $1 million with his girlfriend. And next thing, you find this guy in Afghanistan recruiting fighters to go to Ukraine. So, I mean, this guy looks the perfect guy that's been brainwashed totally by what is being fed by the news, by the media, and basically the hateful rhetoric about Trump that can lead to that kind of thing. The interesting thing that I notice is that just imagine that the situation would be reversed, that the Democrat candidate would have been tried to kill twice, and we still ask Trump if his rhetoric is hateful. Isn't that interesting? Sorry, I'm pausing because there's such a lag. I have no idea if it's working or not, to be honest. No, it's not. It's still why doesn't this... so maybe you know what? I'll try to do that with the... instead of doing this, I'll do this because the screen doesn't change. So basically, you see my technical setup now. I hope that now if I do this, you'll see this clown that tried to assassinate Trump. So basically, really weird situation. There's probably a lot of guys like this that are ready to make another assassination attempt. To be honest with you, I don't see how Trump will be able to go up to the election. I mean, so you can see this is a little bit crappy in terms of setup. However, I'll stay like this because you can see something and you can probably hear something as well. I will just write a little bit in the comment. I'm sorry, I mean it's a little bit messy, but I just need to adjust. Let me know if you... Yes, just a little bit thing in the comment. If you can let me know if that works for you, that'd be great. So again, so this guy, interesting stuff in my opinion. The other thing, you know, the often funny thing related to this is that you had Hillary Clinton into the context of the election, saying that people should go to jail for misinformation, which is interesting considering that she actually paid for misinformation going into the 2016 election with the fake Steele dossier, you know, about Russia supporting Trump and Russian interference. So I mean, it's interesting how politicians are about to lie and forget the past. It's interesting. Other things, before moving to specifically Ukraine, something that is more related to the US. The US is getting short of weapon. This is something that, you know, is concerning for the military, because the stocks are depleting at this time, seeing a lot of Ukrainians. So the military has difficulties to replenish the stocks in terms of weapons. Which means that if you would consider a global conflict, the US basically would probably not be as well prepared as this should be at this time, which is interesting again in the context of slow escalations week from week to week. And again, you have this guy, the head of you know, the NATO military, that you see on screen, that said that long-range missiles to be able for Ukraine to hit Russia is totally justified, and will actually do it. Now we know that Russia has been very vocal about this, and this will lead quasi automatically to an escalation in the conflict. So you know, so basically when you have these two things into balance between the stock of the military arsenal depleting versus an escalation into a global conflict that would automatically involve potentially the US, if it extends to any kind of NATO country. Now this gets interesting, and this gets dangerous actually for us. Just a quick insert here where you can see that you have, I mentioned last week a shortage of Ukrainian fighters, Ukrainian soldiers to send to the front. We've seen images of you know, young people being forced to go to the front on social media. Now what's happening is that the shortage is getting real, because you have other countries such as Netherlands getting into the situation, saying that they would force some of the 19,000 Ukrainian men that are here, that are currently in Netherlands, to basically extradite them to Ukraine's to be able to fight. You know, I've recalled again the anecdote last week. You know, I'm a photographer, I'm an amateur photographer, and I follow quite a few Ukrainian photographers, because they are many of them are actually very good. And what I saw is that many of them as well have fled Ukraine and are now in Poland. There's another guy that was in Germany. So basically these are military-age men that basically fled the country not to fight in this in this war. So before going to the Middle East, so it's, you have some progression from the Russian forces on the Eastern Front and trying to recapture the Kursk region in Russia. So if you look at what it looks like on the map, these are very small. This is a war of very small change positions. So that at the map level you don't see much, and even though I repeat this very often, actually these are very small progress. But this is where we are now. So not much change on the front, except a couple of progresses from the Russian military. What I wanted to mention is that you can see the range of the Storm Shadow missiles that can go 155 miles into Russia, and would allow them to be able to hit, I think it's about 14 airports in Russia. So this will definitely have to be followed. And in terms of escalation, Putin has ordered an expansion of the armed forces up to 2.4 million men. So that's another sign that is expecting the conflict to grow and to be more global in the next future. Now let's come to the Middle East and the quite interesting Mossad operation, who managed to make some pager exploding and some walkie-talkie exploding. It's it's interesting because it involved so what I've seen from the secret services, this is something that secret services do very often individually, but they manage to do it at kind of on an industrial level at this point, because being able to hit some Hamas militants in Lebanon like this at the same time on a global scale, this means that they managed to identify information that the Hezbollah, in Lebanon had ordered pagers and walkie-talkie from a manufacturer, and then so identified it, intercept it, modify the devices, and then put it back in the supply chain. And it's a very it's a more difficult operation, obviously, when you do that. The interesting part about that as well is that many of the Hezbollah fighters are basically clandestine. They are hiding in the population, so which makes them very difficult to identify. This is not a regular army who wear uniform, so it's difficult. So now what's interesting is that by these devices that was destined for the Hezbollah militants, now if you look at who has come to the hospitals in Lebanon on that day where the devices exploded, then you can identify the militants, their relatives, their connections, and get a much bigger, much clearer picture of who you are fighting against. I mean, this is the first operation of this kind by secret service of any country. Obviously, this goes against any law of war. What I think about law of war. I think it doesn't make any sense when the objective of a war is to kill as many opponents as possible. Just okay. It's like the war between the French and the British. It's when the British say, "Sir, so fire first, we fire next." It's up to you. Okay, please, you're welcome. So that's what happens. So this can be considered a terror attack. Is it justified or not? I'm not here to say, but when you are fighting against an invisible threat that is mixing with the population, this is the kind, I guess, of the things that you have to do. And again, there's no clean war. It's always ugly, and this is not cleaner than anything else anyway. So I think yes. So that was really interesting. And what Prime Minister of Lebanon said, that it was actually an extension of the conflict, which actually makes sense to do that, because if you want to destabilize your opponent, your enemy, because their communications are now basically broken. They have to go back to, very old primitive style of communication, which is face to face. They cannot use cell phones because they can be identified. This is why they use pagers, because pagers and so walkie-talkie is another thing, but pagers basically it's a receive-only device. It's not sending any signals, which means that you cannot be located. That's why they kind of use that kind of old technology. But by disorganizing Hezbollah in Lebanon, I think this is probably a sign of more global operation of Israel, and this is what we've seen this week, with Israel taking a lot of weapons and military vehicles to North Israel at the Lebanon border, which could signal potentially again kind of I would say an invasion of South Lebanon to get rid of Hezbollah to protect North Israel. But obviously, if they do that, Iran would probably come into play at this point, which again would be another extension of the conflict. Now, if again, I think I've said that weeks, months ago. Now that the US might have to try to weaken Russia by providing weapons and sending Ukraine to fight this war. But actually it might have hurt itself, because now that you have a really strong alliance between Russia, Iran, and China, and that that the stocks of weapons are depleted in the US, what happens if one part of all this conflict is actually globalizing, and then since it's globalizing, all of your enemies are now attacking and developing their ambitions, such as Russia going more into Ukraine to get the buffer that they wanted. You would have Iran start trying to strike Israel, and then you might have China trying to get back Taiwan fully. So this would be a very difficult situation, I guess, for the U.S. military. They might not be able to defend all their allies, and probably would have to make choices. The first of your choices would be to protect Israel, and that's the kind of thing that we've seen, because we've seen a lot of naval vessels going into the Mediterranean. You have other U.S. Navy vessels in the Iron Gulf. So basically, it's clear that the U.S. priority is Israel at this time, and they probably would let Ukraine and Taiwan fall if that would happen. We'll see, but that's kind of my perception of the situation right now. On that, you had another carrier, the USS Truman carrier group that will be sailing to the Mediterranean as soon as Monday. So again, this clearly shows what the intentions are. Just a quick map on the right. What does it tell you? This quick map tell you that the Houthis managed to strike Israel with what they say is a hypersonic missile. There are some doubts about that hypersonic capability of this missile. but they managed to strike Israel, and the Iron Dome was not able to stop it. So again, that's a pretty interesting strike, considering the low level of sophistication of Yemen in terms of military. Obviously, they didn't build it themselves, probably coming from Iran, but that can serve as a warning of what can happen. Okay, I mean, I had just one single thing about Asia with military Chinese military conducting exercise with hypersonic missiles as well. Now let's move on to our friend Jay Powell. I mean, this guy is just it's really interesting, because as we've seen, the market and the politician bullied the Fed into cutting more than the 25 bips, which would have been, kind of a normal situation at this point. Why? Because if you hear what they say, the economy is strong, everything looks fine, so why do you need to cut 50 bips? At the end of the day, we all know why, and I'll come back about this. But it was kind of a surprise that he go further, go as far as this in terms of cut, at least in my opinion. So it was the first time that the first cut since 2020. The other important thing is that the Fed sees 2 more rate cuts in 2024, 2 more 25 basis point cuts in 2024. The Fed also sees more cuts in 2025, about 100 bips, 1% cut in 25, and another 50 bips in 2026. Basically, it's the comeback of the free money, which will inflate the markets again. And now you start to see where I'm going, where it's kind of a political decision. And if you add this to his statement after announcing the rate cut, I mean, interestingly, the Fed believes that the economy is strong, which kind of justify, ironically, it justifies basically the 50 bips now, the 2 more 25 bips until the end of 2024, the 100% in 25, and even more, and more 50 other bips in 26. The Fed has growing confidence. He says that the strength in labor market can be maintained. We've seen in previous Croissant 5 slides that actually the labor market is suffering, and I have some information after that about this. Consumer spending has remained resilient. I have something about this because Americans are living on credit. They have no cash left at all, no savings. So we'll see that after. But it's just saying, give you some hints, because nothing makes sense at the end of the day. So basically, strong economy. Just if you want to relate that to actually real data of the real world, not the Fed world, we have a record national debt of 35 trillion, which is why the first that needs lower interest rates is the U.S. government itself. Actually, you have a record household debt, which is at 17 trillion. We have a record credit card debt at about 1 trillion. We had the highest credit card delinquency in 12 years. About 67% of Americans are living check to check. And it's one of the lowest saving rates, which is about 3.4% in 2024, and it was 26% in 2021 after the pandemic. So it's very low. So basically, the US and Americans are broke and they have no savings left. So, and people are living on credit, and so basically everyone needs lower interest rate at this point. So so after months of saying that the economy is great, everything is fine, well, we need to cut 50 bips, not to support the economy because everything is fine, but to support the economy anyway. But we all know that the main reason is probably to maintain the markets elevated in going into the election. Probably the Fed didn't want to take the risk of a market kind of hesitating, 25 bips, not enough. Because if I can see the numbers about the job markets, the economy, I mean, everyone sees it. Not everyone reports it because there's a global narrative that goes with the market. But at the same time, probably 25 bp would have been kind of disappointing maybe to the market. So even if the Fed managed to deliver exactly what the market has asked, this time they probably gone higher just to make sure that the market would not be disappointed at this point. I'm getting my coffee a little bit just because I speak. What time is it? Not too bad, could be worse. So how did the market react? So the market had a knee-jerk reaction. On the news it went up, but rapidly reverted and went down for the day. It was on Wednesday. Obviously, most of the reaction was, wow, so they're doing 50 bips. So maybe the situation is worse than we think. Probably, I would say. Now, that being said, so the next day, what happens? Everyone say, okay, we have free money. We'll have free money in 24. So more free money in 24 with rate cuts. Another full point price for 2025. More rate cuts 25th. So it's back to free money again. So everyone is happy. It will inflate the markets. And next thing you know, on Thursday, the market went up very significantly, making again new all-time highs. So at least for the S&P, because the Nasdaq only recovered, part of it is still in drawdown. But the Nasdaq so recovered a little bit, S&P making new all-time highs, everyone is happy. And that's basically, probably again, the next step will probably kind of inflation. We all knew that the American will be sacrificed versus the market with inflation, which will continue again the biggest wealth transfer in history from the lower class to the higher class by inflation and inflating the assets. And why? Because I said, the situation is quite simple. You have people with no assets, lower classes, and people with assets, higher classes. So that's how you transfer wealth very, very easily. What next can I say about Powell? That it's a political decision, very probably. I think you have the only way to justify that 50 bips rate cuts is that you have the economy falling off of a cliff, basically, and they know it. Probably they're the first one to see it. They are the Fed. They have all the real information available that will come to us only in a couple of months. So they might see the economy falling from a cliff. It might be a purely political decision, because the mail-in voting, the early voting is coming pretty soon right now. So that would not be a good timing to disrupt any kind of political discourse about the strengths of the economy and everything is doing well. And the other point might be as well about the banks. So I didn't talk about the financial sector for quite a long time, but that will help the banking sector. We again, I didn't talk about it recently, but we've had a lot of rumors about some banks being in a difficult position right now that would need some influx of cash, and obviously low interest rates will help that. So we'll see about that. What next? Maybe we can go back to the real world and why this is the Fed that needs low interest rates. First chart, top left, you have so the deficit in red, and so the spending in red and the income of the government in green. You can see that the spread is widening. The last time it widened that much was obviously during the pandemic and in 2008 for instance. But now it's widening in the context of what is supposedly a strong economy. So the spending will keep going up just because of the exponential curve of the interest rates. That is now maybe the second sector of expenses of spending for the government. If we have the economy going down, slowing down, the revenue for the government will slow down as well, and the gap will widen. So in order for the government to be able to spend as much and reduce this gap as much as possible, this means cutting interest rates massively. You also have on the top right, I always, I kind of have a dyslexia, if you can say this, for between left and right. So that's interesting. Anyway, so that's top right. I need to think anytime I do this. Fiscal impact of Fed loss, for basically all the Fed history, the deposit of Fed earnings were generating income for the Fed. For the last 2 years, 1 year and a half, 2 years, it has transformed into losses for the Fed. Which again is interesting. The Fed is the only institution that can accumulate losses without any kind of consequence. Isn't that interesting? Now the next thing, that the bottom center chart, what it shows you is that the businesses bankruptcies are skyrocketing, or at least increasing, which is again not very good sign for the economy. So again, you have what the Fed says and you have the reality of numbers. Always look, it's the same about in every circumstance. Don't hear what people say, look at what they do and look at the numbers. The numbers tell you where you are. If you start listening and believing narrative, this is how you are misled. There's a quote by one actor, I cannot remember the name, and the actor was saying that if you're not watching the news, you are not informed. But if you are watching the news, you are misinformed. So what do you check? So this is why, again, my fight for citizen journalism is very important. And again, this is why X is important as kind of the only source of information where you can get, I would not say not unbiased information, because everyone is biased. I am biased. Everyone that's giving me information, I'm biased. But at least on X, what is saying is that I can have opposing views and then make my own decision about what I want to believe, which is not the case, obviously, with mainstream media, where everything that doesn't go, along the narrative, the global narrative, is basically censored. Free speech is kind of dying thing in the U.S. despite all the amendments the First Amendment we may have in the Constitution. It is what it is, and this is why this next election is important. So stop about this. back to economy and the situation. Interesting chart. Again, coming from Twitter, where you have the change in household net wealth. I managed to say that correctly, between the Trump presidency and the Biden-Harris presidency. What basically it shows you is that, the Biden and Harris presidency is touting, okay, the change in the household net wealth increased by 25% over the last 4 years. Now, adjusted for inflation, this 25% translate in 4.5%. Which is definitely much, much lower. In comparison, during the Trump presidency, the change in household net wealth was above 35%, and adjusted for inflation, it's still above 25% at 27%, I believe. So you see kind of difference and the kind of narratives that we are fed, and this needs to always go back to the numbers. If I want to go back to this election, it's interesting that the left is still going basically with the same narrative that they had in going into 2020, because now we have two presidencies that we can actually compare. So that's how do I want to say that without be too biased? I mean, this helps you make your own mind on facts, not on narratives. That's what I wanted to say. So if you look at the top right chart, this is basically a map of the share of adults experiencing difficulty paying for household expenses. And the average now is above 37%, is 37.5% of adult household having difficulties to paying their bills. Obviously, you have the poorest states. Basically, it's higher. You have Mississippi, for instance. 94% of households have difficulties paying their expense, paying their bills. It's one household out of two. It's totally insane. You have similar numbers in Alabama, 45%, West Virginia, 43%, and 43% again in Louisiana. So that just shows basically the struggle of the Americans. Now, if we go bottom left, what do we have? We have the net savings, U.S. national and foreigner net savings in the U.S. So you can see that the Americans, the national net savings is negative. So basically, what this means is that the Americans don't have a dime left in a bank. It's gone. There's nothing to pump anymore there. The only people who have still net savings in the US are foreigners. So the consumption basically will rely on foreigners in the US to maintain that kind of business activity. So now if you look at this, it's really concerning, because where will the consumption come from? Again, like I said before, like I mentioned, Americans have maxed out their credit cards. So I honestly, I don't know where it can go from there. So the only solution for the Fed and governments to fake the economy at this time is to put a lot of money in a system, which what the Fed does with more important rate cuts than expected. We've seen again in the months and weeks before that most of the growth was coming from government injection, government labor. Very little is coming from the economy itself. Let's say the real economy, I would say, not sustained by any government activity or subsidies. Now, in terms of economy, last thing maybe, I don't know if I have much more thing. No, I don't, about the economy. So we'll go there and then we'll move to the market. So the maps on the bottom right shows you hires rates by state, and it has dropped to, on an average, at 3.5%, which is a low. So hiring rates are going down as well. Again, it's another sign that the economy, the job market, is working as expected. Again, Jay Powell says that unemployment shouldn't go much further. You know, it's like basically it's the same narrative as the inflation is transitory. So I don't talk much about inflation, but that could be the next wave of inflation coming from the rate cuts, obviously. So let's move on. Again, we seem to be in total cognitive dissonance. Here, some gaslighting, like most people say. It is what it is. So next, move on markets. Before looking at the markets themselves. Again, this is not an investment advice. I don't have my banner here to show, but everything that I say about the markets is not investment advice. This is a comment. This is my personal opinion, and that's it. And you should check with your personal investment advisor about what you should do about your investment. But nothing is an investment advice here. So let's go. So it was an interesting chart that I've seen on Twitter, coming from Bloomberg, Goldman Sachs, where they were trying to figure out if buying the dip is actually a successful strategy when you have the Fed that is pumping up the markets, putting a Fed put on the market. Obviously, this will be. You don't have to put that many quantitative analysis to figure out that every time the market dips and then you put money into it, if the Fed is coming to save the market, then you'll make more money than you've only invested. It's kind of a martingale strategy. I would not advise to do it. Like I always say, being long only is not a strategy. Investing in martingale strategy is not a strategy either. It works until it doesn't. Just wait for a really big drawdown in the market, and if you do that, you'll see your losses accumulate. That will force you, specifically if you have leverage, to cut your losses at the worst time. That's what it is. That kind of strategy is not about if it will happen, it's about when it will happen. So what happened this week? So again, thanks to a big Thursday, everyone was looking happy after this week. You have interesting point was Bitcoin coming back up 5%. You had gold obviously going up and making new all-time highs. Why? Simply because when you have free money, you are debasing your currency, so you're going to harder assets. So gold is a harder asset, Bitcoin is a harder asset as well. And it goes also into real assets as well. What are real assets? You have energy is a real asset. So you have oil going up. I think that is kind of a consequence there. Globally, you have DBC, which is the commodity ETF, going up significantly. That it was very weak on the recent weeks and months, both oil and commodities as a whole. But with the Fed coming up, okay, fine, we're saved. So harder assets are favored. You have the equity markets that are inflated. You have the Qs making 1.5%. You have the S&P making more than 1% of the week on the week. You have the dollar going down slightly, not that much. What was interesting actually is bonds going down. So with interest rates going down, you would expect bond going up. Actually, it seems that the bond market is signaling something a little bit different. Maybe the rise in inflation expectations. It's not clear to me. I didn't have the time to research exactly why most market participants started to sell bonds. Was it just buy the news, sell the rumor? I think that the coming week will give us a much clearer perspective of where the markets want to go at this point, both in terms of equities and both in terms of let's say interest rates, fixed income assets such as bonds. Volatility was smashed. Obviously, everything is fine again, and we'll talk about the yen. Again, it's a divergence with what was supposed to happen, considering that the Fed is cutting rate. The logical explanation would have to be that the yen would go up because the interest rate differential between the US and the yen is going in favor of the yen. So you would expect the yen to go up. However, it went down. And I'll come back to this because that goes back to what I said last week, about the trader positioning, which is again interesting. If you look at the stocks, you had most of the tech stocks, so debt-based, let's say businesses, I would say, that are going up with interest rate lower. You had Meta plus 7%, Google 4%, Apple 2.5%, Microsoft 1%, and the only divergence here was Nvidia minus 2.6% on the week, which is interesting. That might be something bigger here. Obviously the Nvidia bubble comes to mind. You have some what is it? So you have some financials going up, like JP Morgan, Chase, up 3%. Obviously, interest rates lower help. So basically, that's kind of situation. So in 1 week performance, if you look at the sectors themselves, you have communication services, energy, consumer cycle, financial going up, and healthcare, real estate, consumer defenses going down, which makes sense. It's a risk-on environment again at this point. So you clearly see the ranking between risk-on and risk-off sectors. This is what this chart says at this point. So now, if we look at the individual charts themselves, what do we have here? What we have is the S&P 500. What it shows you is basically the drop on the day of the announcements after the new all-time high, and then the next day on Thursday the jump. I've addressed this before. Yesterday was more muted, slightly down, recovered by the end of the day. Basically nothing happens. So again, I think that the dust is settling at this point on the market, and the coming week will be much more important to figure out where the markets are going for the next few months, specifically going into the election. It's in 40 something days right now, 45 maybe, who cares? It's November 5th, that's the only thing you have to know, and still a lot of things can happen during this. Maybe someone, a crazy guy, will manage to be successful in an assassination attempt. This was already two. I think the more we're getting close to the election, I believe the crazier it will get. I have no idea which form it will take, but I'm expecting some crazy stuff going on, specifically with the start of the early voting. There will be some kind of already, how do you say this? It's not a contestation, that's the French word, but some challenges in the votes. I think as soon as people will drop some votes, there will be some challenges everywhere. This will get crazy, and probably also a heightened social risk, I would say, between the most crazy part between the left and the right. So we had the S&P new all-time highs. We have the volatility about to be crushed again if the market still thinks that next week that everything is fine, everything is fixed. Now we have what is that? Yeah, so that's the bonds that I said, on the new, since, so it was going up until the Fed announced the rate cut, and once it cut rates, the bonds went down on Wednesday, on Thursday, and basically flat yesterday. So that's interesting. Again, kind of a divergence that we've seen again. Next week I believe will give us a lot of information. You have gold now. Gold is going very happy about the rate cut for what I've mentioned before, a rush to harder assets, considering the accommodating Fed policy with interest rates right now. Probably another sign of more inflation expected in the market, but a rush to hard assets. I would say similar thing for Bitcoin. Bitcoin was looking weak. Then the Fed enters and give it a boost and takes it back to the middle of the range that it was before. So that's interesting. It seems to be really at a turning point, which will coincide with a turning point on the market, turning point on the election, and it's probably a reason why, as long as the election is not gone, and I would say probably until January, when the new president is instated, we might be in a non-very clear situation. So you have crude oil coming back to the bottom of its range after it broke down. It broke the support. It might be looking as, okay, let's go back inside the wedge, or is it a pullback where another leg down? Again, we'll have a much clearer picture next week. What is this? Yes, that's the dollar yen. So if you remember last week, I showed you a chart. I started looking at the commitment of traders report because it can give you some clues about the positioning, about speculators, where they are, if they are massively long, massively short. And like I said last week, the commitment of traders report was showing that the traders in the yen were massively long the yen at this point. So that might signal that the movement in the long yen might be kind of exhausted, very little potential to go up, and again might be an opportunity to for the yen to go down. Again, I explain why I'm looking at this, because I'm looking for ways to diversify my approach in investing. So you know that most of my approach is momentum based. Why? Because I don't want and I don't like to fight against the market. The price is always right, in my opinion, and who am I to say that the market is wrong and go against the market? So basically that's my philosophy, and that's why most of what I do is based on momentum. That being said, it's interesting to look at information that can give you some clues about the other positioning and the remaining potential, if you'd like, in a trend. So that's why the Commitment of Traders report can be used as not only a signal in itself, but also risk management system. So if you look at the yen now, so it's the dollar yen. So when I say that the yen is going up, this means the dollar yen is going down. So at the top of this chart, you can see, so I don't have the Commitment of Trader reports right now, but if you look at the top of this chart, this is where the traders were massively short yen, long dollar at this point. So massively short yen. And then the market dropped. I mean, the potential for more short yen was kind of, exhausted at this point. I mean, if everyone is already short yen, who will short yen to take that further? And that's why basically as soon as you have a reversion like this, you had the BOJ intervening, and since everyone is on the same side of the boat, most traders have basically to cover their position, not to accumulate losses like crazy. And in all this ramp down that you see on the chart, what this means is that so during that time, traders went from massively short yen to massively long yen. And so that kind of shows that, again, in terms of risk management, it shows that maybe the long yen position that might have been exhausted, and most of the trend followers would have started to be long yen at this point on the way down of the dollar yen. Again, remember the chart is inverted. Be considering what I say about the yen. So everyone was long at this point. Trend followers were coming long, might be exhausted. So if you're a trend follower and you use the Commitment of Traders report as a risk management tool, you could have reduced your position when traders were max short yen at the top of this chart, and you might have reduced your position at the time of traders being massively long yen, so at the bottom of the recent bottom of this chart. So why this yen reverted like this, I don't have any explanation again, but the only thing that we can see is basically that even if the spread between interest rates widened between yen and dollar in favor of yen, this didn't put more pressure to the long yen because everyone was already long yen. So you might have that kind, reaction like this that might again be pushed by traders covering their long position, meaning selling their long position once they start accumulating losses. So they might want to exit, and which might be what triggered this weakness in the yen and strength in the dollar that you see on the chart. Hopefully this is helpful for you to be able to manage your position. I think it's helpful for me. I'm not a discretionary trader, a portfolio manager. Everything that I do is systematic quantitative, but that's the kind of thing that I started researching, both in terms of risk management, which I think is very important for me, considering that I'm again a trend following momentum portfolio manager. I am less likely potentially to implement this as a signal, because again, I don't like to fight against the market. But that being said, you can still potentially generate very short-term momentum signal based on that. Let's say we were at the top of this chart with managers being massively short yen. You think that there's a potential for the yen to rise, which happened after that. So maybe you just have to wait for the market to confirm that the yen is strengthening and then take a position, which might give you quite a short-term signal, trend momentum signal based on that, because that can, basically what you're trying to capture is the short or long covering of some managers accumulating losses on their trade. So that's interesting. And again, this is something that I will check. So now we're done. So I mean, it was not as smooth that I thought it would be, but anyways, I'm back here. So thank you again. I mean, it was about an hour, which is a kind of my regular stuff. So again, sorry for the little mishaps here. Hopefully it kind of worked anyway, and I'll try to practice again my video. I didn't have the time, so basically what I did is that this morning I did some tests to be able to do that. Obviously it was not perfect. I'll try to get some time more to practice with this to make sure that I can manage things coming to screen in a much more, let's say, smoother way. But you do this with me. So thank you very much for your time. I hope it was interesting. There was kind of things to do here, a lot of things to unpack on the markets. So that was cool. Oh, I see some likes coming here. That's interesting. That's the first time I've seen it. I'm checking on my other laptop here to make sure that it works. So thank you again. That was great. Enjoy your weekend. Spend some time with your family, because I'm thinking more and more about that. Obviously, I'm getting older and I'm reading more philosophy stuff. Stay in the moment. This is, I believe, the most important. The past is not important. It's what it is. It's done. It's never coming back. Future is not important. It does not happen yet. Anything can happen, and what is happening is now. So enjoy your weekend, enjoy your family, enjoy your relative. Remember that probably the most important thing on your deathbed will not be if you spend more time at work. It will be, okay, did I spend more time to the people that I love? I was in France back, so this week. My kids are back. All back in France. It's interesting because they actually never really adjusted to the US. The cultural gap is much bigger than I was expecting, and my kids actually felt it in much stronger way than I felt it myself. I feel comfortable in the US. I like it, but so we have different reasons for liking France and liking the US. We're not at the same age. We have not lived the same life, obviously, not the same experience between me and my kids. But what I wanted to say is that when I came back to France this summer, I spent a lot of time with my family, and that's the kind of reaction that I had. Is at some point what will be important is that how much time will I've spent with the people that I love, and people I love are my kids, obviously. I mean, they are young, so they probably don't want to spend as much time with me that I want to spend with them. But that's the way of life, I would say. So thank you again for your time. Go back to your regular activities, family, a little bit of business, a little bit of work. If you can mix the two and enjoy both, that's perfect. That's what I do. Hopefully it will continue as long as possible, but I can stop here. Thank you. Enjoy your weekend, and bye bye.